there, good morning. You're watching Market Cafe with me, Snehi Shah, and Shreyansi Singh on ET Now. Now, this is a show where we take you through all the important global stories that we've been tracking for you bright and early this morning, all the important action that's coming in from overseas markets, and in the second half of the show, we'll also go domestic and look at all the stocks that could be potential buzzers in today's trading session, as well as the stocks that brokerages are keeping on their radar. So with that, let's kickstart the show then. And Shreyansi, positive handover, I believe, coming in from the American markets. All three indices roughly in the positive. So take us through what the US markets did.
Right, absolutely. So US stocks, like you said, closed slightly higher as investors awaited guidance from a host of Fed policymakers later in the week. Now, with a large amount of bond supply also due to hit the market, that is also in focus. Mind you, equities last week posted their biggest weekly percentage gain in about a year, and this was after a weaker than expected US payrolls data was remaining in focus. But what is the handover that you're looking at when it comes to crude?
So absolutely, a lot's happening on the US markets, all three indices in the positive. Nasdaq has logged in its 7th straight day of gains, not something that was not seen since Jan this year. Dow and S&P also up since April and July respectively. So, positivity coming in from the US markets. Let's shift focus to commodities then and start talking about oil, because oil prices have edged higher on Monday after top exporters Saudi Arabia and Russia have reaffirmed their extra voluntary oil supply cuts until the end of this year. So on the back of that news, Brent was just under that $85 per barrel mark. WTI crude has closed just over $80 per barrel. And Saudi Arabia has confirmed on Sunday it would continue its additional voluntary cut of 1 million barrels per day in December to keep the output somewhere around 9 million barrels per day, a Ministry of Energy source has said. Now, Russia also announced it would continue its additional voluntary cuts of 300,000 barrels per day from its crude oil and petroleum product exports until the end of December. Oil prices rebounded after both benchmarks lost about 6% in the week to November 3 as supply concerns driven by Middle East tensions eased. Remember, when supply goes down, the prices of something will always eke, because when supply is limited, the demand for that commodity will go up, and based on that, the prices will always inch higher. Now, what else has aided oil prices is a weaker dollar, because a weaker dollar also helped the oil prices. The dollar index fell as low as 104.8, which is the weakest levels that we're seeing since the 20th of September this year. And remember, a weaker dollar boosts demand for crude purchases by holders of foreign currency. So they're able to buy more crude based on that. So crude prices have gone up on the base of both of these reasons. But just as markets finally start to shrug off bearish trends, a Morgan Stanley report has sounded warning bells for the Indian economy. Now, according to this report, the central bank will resume rate hikes if Brent crude oil rises and stays above $110 per barrel. Now, remember, the MPC has hiked rates by 250 bips between May 2022 and Feb of this year to combat rising inflation. The report also says that a $10 increase in oil prices will boost inflation by 50 bips and continues a 30 basis points widening in the current account balance. We caught up with Saugata Bhattacharya to understand the higher crude derail and the revival of markets and the economy. Is this going to be possible? Listen into what he had to say.
Global oil markets definitely remain tight. The supply cuts by the OPEC plus, etc., low inventories. But together with this, there are already major signs that despite an increase in activity and import demand from China, Brazil, India of oil, there are signs of a major weakness developing in the US. Europe, as you know, particularly Germany, is already in a relatively bad shape, and US macro indicators do suggest that there is a weakening there. So that demand balances out between the different geographies. Secondly, if oil were indeed, due to some geopolitical shock or whatever, rise to $110 a barrel, that itself, as you mentioned, will have a very major braking effect on developed markets and thereby from the trade side, etc., on into emerging markets, including India.
Well, that of course is the word coming in from Saugata Bhattacharya on crude, but let's shift focus to events to look out for. And in terms of global cues, you've got China trade and forex reserve data that is in focus. From the Eurozone, you do have the PPI, and from the US, you have the trade data that will remain in focus. In terms of global earnings, you're looking at Maruti Suzuki and Novelis reporting their numbers. So these counters will remain in focus along with Nifty 50. In terms of Nifty 50 earnings, you've also got Power Grid that will also remain in focus. Now, in terms of corporate action, you've got a host of counters that will be in focus on account of board mulling a fundraise to the likes of Dilip Bilkon, Alok Industries, Anupam Rasayan, Inox Wind, Jyoti Structures. These will all remain in focus. Now, you've also got Atul Auto that is mulling a proposal for buyback of shares, and Cochin Shipyard that is mulling a subdivision or split of shares. So both these counters will remain in focus. In terms of IPO action, you have a host of counters that will remain in focus. So you do have Honasa Consumer, that is Mama Earth parent that will be listing. So that one will be in the spotlight along with ESAF Small Finance Bank that closes for subscription. Now from November 7th to 9th, you've also got ASK Automotive, and that will remain in focus on account of opening for subscription. In terms of other events, you also have Royal Enfield Himalayan 452 that will be launching today. So do keep an eye on that one.
Well, let's shift focus to some other global stories then, and somber news coming in from Gaza because the death toll in war-stricken Gaza has hit a grim milestone, crossing that 10,000 mark, of which 4,100 killed were children and 2,600 were women. UN Secretary General has referred to Gaza as a graveyard for children as he reiterated his call for a ceasefire. He also added that the Rafah crossing wasn't enough to let aid into Palestine enclave. Hospitals in the region face a looming shutdown due to lack of fuel shortages. Meanwhile, South Africa has joined the list of countries that have recalled their ambassadors from Israel in light of their actions in Gaza. Unfortunately, a ceasefire continues to be a sticking point as the UN Security Council meets for the 6th time.
Well, shifting focus, US Treasury Secretary Janet Yellen will be hosting Chinese Vice Premier in what will be 2 days of intensive diplomacy. Now, the bilateral talks are a part of a broader push between American and Chinese officials to make progress on specific issues. The talks, set to take place on the sidelines of the Asia-Pacific Economic Cooperation Forum next week, will remain in focus.
South Korean stocks soared after the country reimposed a ban on short selling. South Korean authorities have said the ban will be until June of next year. The ban has been reimposed with the aim to create a level playing field for both retail as well as institutional investors.
Back in September, Citigroup announced a corporate overhaul sounding alarm bells around deep job cuts. Under Project Bora Bora, the company has discussed job cuts of at least 10% across major businesses. The discussions are in nascent stages and numbers could shift in the coming weeks.
And while shifting focus to some news back home then, the national capital continues to battle its annual air pollution crisis, and the odd-even scheme has made a comeback. The Delhi Chief Minister Arvind Kejriwal's flagship schemes will be reintroduced in Delhi from the 13th of November to the 20th of November. Remember, this happens as the city's air quality remained mired in the severe category for the 5th consecutive day. Shifting focus to Bombay, then the Bombay High Court has stepped to rescue citizens in a strongly worded court. The court banned all construction activities across the city till Diwali and saying that people's lives matter more than development works. The court also restricted timings for bursting firecrackers in the city from 7 to 10 p.m. and has asked the civic body and other authorities to ensure that curbs are properly implemented.
Well, with this, we're timed out on this segment. See you on the other side.
Hi, there, welcome back. Let's take stock of how the Asian markets have opened up this morning, and South Korea is going to be the Asian market that's going to be in focus today because the stocks fell 2% on opening and still down almost 2%, leading losses in the wider Asia Pacific region ahead of trade data coming out of China as well as a rate decision by the Reserve Bank of Australia. Now, why is South Korea in focus? We did talk about it earlier in the show. The country has banned short selling, and they have also said that this does not mean that the people who currently have short positions will have to sell off their positions. So for them, this short selling position can continue, but the country has imposed a ban on short selling till next year. On the back of that, Kospi is down 1.8% as we speak. Kosdaq also dropped 1% on opening today. So South Korea is going to be in focus on back of that. Shifting focus to Australia then. Australia opened with a downtick of 0.2%, still continuing with a downtick of almost 0.4%. Now this comes in ahead of the central bank's rate decision. Now economists have expected the central bank to raise its key policy rate by 25 bips to 4.35%. So let's see what the Central Bank of Australia does and how that pans out for the Australian indices. Now in Japan, then shifting focus, the Nikkei slipped by 0.5% in the first hour of trade. Nikkei continues to gap down with a 0.6% cut coming in. China is expected to post its trade data for November. So on the back of that, let's take stock of what Hang Seng is doing. Hang Seng also down 0.5%. Shanghai, let's take stock of what Shanghai is doing. Shanghai also in the red, almost 0.2%, down 0.25% downtick coming in for Shanghai as well. So while overall the Asian markets look in the red, let's also quickly touch what the US bonds are doing. And the yield on the 10-year treasuries rose 9 bips to 4.649%, reversing the 29 bips decline that it saw last week. So we've been seeing some upturn coming on the US bonds as well. Investors are awaiting a series of bond auctions later this week. Well, we closed just above 19,400 yesterday when it comes to the Nifty. Implied open indicating 19,467. Not much, a rather muted start implied for us. So let's see where we go from here this morning, Shansi.
Absolutely. We also have a jam-packed lineup for you on the market. And first up, we have at 9:20, we have Rajiv Thakkar, who's the Chief Investment Officer at PPFAS Mutual Funds. Now, we also have Dr. Abhay Soy, who's the CMD at Max Healthcare at 9:40. After that, we have Vineet Bulinchkar, who's the Head of Research at Ventura Securities. In terms of earnings that remain in focus, we also have the management of BKG Foods International, Manoj Verma, who's the CEO, and Rishabh Jain, who's the CFO, to talk to us about their earnings. Welcome back. Thank you so much for staying tuned in. Let's switch gears to another story coming in from Delhi now. In a move to provide relief to consumers, the centre government has launched the sale of Bharat Atta at an affordable MRP of 27.50 per kg. Now, with Union Minister Piyush Goyal flagging off 100 mobile vans, National Cooperative Consumers Federation of India plans to expand this initiative, offering essential commodities like Bharat Dal and onions at subsidized rates in Delhi NCR and across more than 500 spots pan-India. My colleague Samir Dikshit is joining in with more details. Samir?
In a move to provide relief to the consumers, the masses, the government is taking multiple steps. We have seen that earlier government intervened when the prices of onion, it was soaring quite high. Then the government intervened and provided onion at a subsidized rate of rupees 25 per kg. Similarly, we have seen that the government has been selling Bharat Dal or Chana Dal at a subsidized rate of rupees 60 per kg. Now, in a next bold move, government is going to sell Bharat Atta. That's the wheat flour which government will sell at a subsidized rate of rupees 27.50 per kg, and Bharat Dal is going to be launched, or it is going to be sold by various government agencies, and it will start from 7th of November. So let me show you a larger picture. So that's the Bharat Dal which government is already selling, the Chana Dal which the government is selling at a subsidized rate of rupees 60 per kg. Now let me show you Bharat Atta or the wheat flour which government is going to sell. Now this is the pack. If you see, it's a 10 kg pack of Bharat Atta. The price has been clearly marked that it is 27.5 per kg. So a 10 kg pack could easily be understood that it is going to be rupees 275. and it will be sold through various government agency. Now you can also see that these onions which are being sold at a subsidized rate of rupees 25 per kg. So these are couple of items, essential items which the government has decided to sell. Now let me also show you that how the selling will take place. So if you see, these are the mobile vans which are going to be stationed across multiple spots in the country. So through these mobile vans, Bharat Dal, Bharat Atta, even the onions will be sold. Not just the mobile vans, even through the Kendri Bhandar, from that spot also from NAFED or NCCF, the government agency. So through these multiple points, the government will be selling these essential items. The intent is to provide relief to the consumers from the soaring inflation rate, and also this will also help the government to keep a check on the traders who are involved in illegal practices. So that's the bold move that government will be selling Bharat Atta at a subsidized rate of rupees 27.5 per kg.
All right, update coming in on Bharat Atta as well as Bharat Dal from the government. Thanks, Samir, for those details. But Food Secretary Sajeev Chopra also spoke to ET Now about the same and the government's wheat, rice and sugar stock with regards to these subsidies. Here's an excerpt of that chat.
So under the open market sales scheme that the FCI runs, so we are now supplying wheat at 21 rupees 50 paisa to NCCF, to NAFED and to Kendriya Bhandar. And it's also an offer to all the state government located and also central cooperative agencies. So once these agencies pick up this particular atta, this wheat at 21 rupees 50 paisa, we have an agreement with them that they will be supplying it to the consumers at 27 rupees 50 paisa. So in the initial phase, about 2.5 lakh tons of wheat has been allocated for these cooperatives. But there is no dearth of quantity that is available with us, and once this quantity is exhausted, that can be replenished and we can supply more quantity to these agencies so that the sale of atta to the consumer at 27 rupees 50 paisa is maintained until the new crop comes in.
Pan India?
It is happening pan India.
Okay. Through what all government agencies, and initially what all states or maybe the spots that you have listed in your website?
So there are thousands of locations. I would not be able to tell you the state-wise details, but there are thousands of locations where this atta will be distributed. So we are beginning today at the national capital, and in the next few days, it will get spread over to across the country.
Well, that of course is the word coming in from the Food Secretary, but switching gears to aviation now, India's largest airline, Indigo, said it will expand on more international routes, including to Medina and Bali soon. The airline is expecting grounding of more aircrafts in the fourth quarter due to issues in the Pratt & Whitney engine. ET Now's Sumit Chaturvedi caught up with Indigo's CEO Peter Elbers in this exclusive conversation. Listen in.
You know, as one of the largest, if not the largest operator of Pratt & Whitney engines, of course, we're in constant dialogue with Pratt & Whitney, both on what precisely is going to happen at what point in time, as well as on the financial part of it. And I think next to what the precise information from the Pratt & Whitney side is, we're also discussing with them how can they help us to take some of these mitigating measures. And until we have that clarity, any number would be more like speculation going forward, because it all depends. There's an equation of what is the number of planes and what's the number of engines being involved on the one hand side, and how much mitigation we can do on the other hand side. So we focus clearly on not only what is the impact, but also how we can do the mitigation and to what extent Pratt can help in addressing that mitigation. When it comes to the compensation, of course, that's an outcome to clearly also what's the overall impact. And that's been a topic of discussions, I should say intense discussions we're having, of course, with Pratt & Whitney.
And any clarity on compensation when it will come to you, that is also depending on the grounding and the clear picture on grounding of aircraft, the numbers?
Yeah, well, I think you pretty much mentioned it. That is, of course, there's a correlation between what's going to be the compensation on the one hand side and what is going to be the precise number of groundings. And as that number of groundings and as that number of supply chain challenges is still fluctuating, the same would go for that number on compensation. I think what is clear that Indigo is operating in world's most dynamic, vibrant and fastest growing market. We need that capacity, and we're putting all our energy in obtaining that capacity with the help of Pratt and outside the help of Pratt, also with some other arrangements we're doing.
And let's talk about expansion, Peter. Last time we spoke, clearly you were quite bullish about expansion on global front. You have launched 20 new flights globally in the past 6 months. What is the outlook going forward, especially in the coming season of December Christmas year end?
Yeah, thank you, Simon. I think what is very encouraging to see is I recall pretty soon after I joined Indigo in August, September last year, I joined the inaugural flight of Indigo to Ras Al Khaimah. At that point in time, that was our 100th destination, and it was actually a moment of big pride and celebration for the company. Today, we operate 115, and soon we'll indeed reach the 120 in terms of number of destinations. So we have, in fact, delivered of what we promised in terms of international expansion and domestic expansion. The most recent international expansions to Baku, Tbilisi, Tashkent actually are doing very well. We have indicated that soon we hope to be able to announce also new flights into Bali and into Medina, and that will further expand our international portfolio.
Well, that's the word coming in from the Indigo CEO. But let's go on from one exclusive story to another then. And SEBI has revoked the ban against 14 entities allegedly involved in the Lux Industries insider trading due to lack of evidence. My colleague Ankur is joining in with all the exclusive details on this. Ankur, good morning. Take it away.
Yes, market regulator SEBI has revoked ban on 14 entities, and that was done in case of Lux Industries insider trading case. Now, market regulator has said that it could not establish the link, and hence it is giving up the charges. The allegation for that, there was insider trading in Lux Industries earlier, and that was done by 14 entities, which included MD and CEO's son Udit Todi. Now the charges for that, the unpublished sensitive price information was passed on. In fact, USPI, which is termed as unpublished sensitive price information, was passed on by Udit Todi to various other entities, but now the recent order of SEBI says that there was only one call which was made, and hence it could not establish that how the information traveled to all these 14 entities. Hence the charges which were leveled that it is an insider trading case are dropped. In fact, the market regulator is also going to return the 2.94 crore penalty, and that too with charges because it is dropping the case now. The ban is revoked on all 14 entities.
Well, thanks, Ankur. But stay with us for now because it is an ET Now news break confirmed. We told you first that the government has given an extension to the tenures of MD and CEOs of Bank of Maharashtra as well as Central Bank of India. So help us put that story into perspective.
Yes, it seems government has gone for continuity as far as the appointments of top MD and CEO in public sector banks because government has extended the term of current MD and CEO of Central Bank of India as well as the Bank of Maharashtra. Now, ET Now reported earlier that government is considering to extend the tenure of current MD and CEO of Bank of Maharashtra A.S. Rajiv as well as Central Bank of India MD and CEO M.V. Rao. Both these notifications came on late Monday evening, and now government has extended the term of Central Bank of India MD and CEO M.V. Rao for almost 2 years. Now that is till July 2025. Apart from that, if you talk about MD and CEO of Bank of Maharashtra, the term has been extended till May 2024. Now both these extensions have been done because the individual banks have been performing well. If you compare the preceding scenario, A.S. Rajiv has been working with Bank of Maharashtra since 2018, and now this will be around 5 years tenure which is given by government to MD and CEO of Bank of Maharashtra. For M.V. Rao, the tenure extensions assumes significance because under his tenure only the bank came out of PCA.
Alright, Ankur, thanks for all of those details. Central Bank and Bank of Maharashtra to be in focus today on the back of that news flow. But with that, we'll slip into a very short break on this segment of Market Cafe. We'll look at more stock-specific news on the other side.
Welcome back. Thank you so much for staying tuned in. Let's switch gears to counters that will remain in focus on account of news flow. And Vamakshi joins us with that list. Vamakshi?
Well, yes, let me first start off with Fusion Microfinance. A good set of numbers is what the company has reported this time around, and net interest income has seen an uptick of almost 26% on a year-on-year basis, and the operational performance has also been quite good, with PPOP seeing a jump of almost 29% and the net profit jumping up by almost 32% to 126 odd crores. Asset quality has also improved quite significantly, with GNPA improving by almost 52 basis points sequentially and NNPA improving by almost 13 basis points sequentially. Apart from that, we also have Indo count in focus, again on the back of a good set of numbers. Revenue saw an uptick of almost 20%, but it is the EBITDA margin that has actually improved for this counter, standing at 16.3%, implying an improvement of almost 270 basis points on a year-on-year basis. Net profit has also come in nearly 71% higher. RR Kabel, again a good set of numbers have come out from this company, and that is the reason why this stock will also be on our radar. Revenue saw an uptick of almost 18%. The margins have actually improved from 4.71% to 7.51%, and the net profit has more than doubled to 74 odd crores. Other than that, keep an eye out on Bajaj Finance. Now, earlier the company had announced its plans to raise up to nearly 8,800 crores via QIP. And as per terms of the agreement, the QIP share sale has been finalized at a floor price of almost 7,250 odd crores, and they plan to sell nearly 1.2 crore shares to large investors via the QIP. Also keep an eye out on Paradeep Phosphates. Now, from agencies, we are hearing that the company has shut down its ammonia as well as urea plants at Goa. The plant shutdowns have been held in order to carry out regular annual maintenance, implement energy saving schemes. So keep an eye out on Paradeep Phosphates as well. Other than that, keep an eye out on a few banking counters like Central Bank of India and Bank of Maharashtra, because the government has extended the tenure of MD and CEO of both these banks. For Central Bank of India's MD and CEO MV Rao, his term has been extended till July 2025, while that for Bank of Maharashtra's MD and CEO AS Rajiv has been extended till May 2024. Also keep an eye out on Varun Beverages, because they are planning to expand India's capacity by almost 45% over calendar year 2022, and in fact they're confident of maintaining the current EBITDA margin at around 21% over the next few quarters. And well, Polymedicure has also gone ahead and upgraded its guidance in the commentary that came through in the con call. They have revised FY24 revenue growth guidance upwards to 22 to 24% from 20% earlier. And lastly, also focusing on Thermax, because in the con call the company highlighted that they are expecting the order pipeline to grow around higher single digits in the second half, and in fact a large order worth almost 300 to 400 crores from refineries may also close during the second half. So on the back of that, keep an eye out on all of these counters.
Absolutely, Vamakshi. A whole host of counters in focus today on the back of their earnings as well as con call takeaways. But staying with con call takeaways, then beauty and wellness company Nika has reported a good set of numbers for the quarter gone by. Winnie is joining in with what the management had to say on their con call. Winnie, take it away.
So absolutely, it's a decent set of numbers that has come in from Nika. When we're seeing in terms of the beauty and personal care segment, yes, that's seen the growth coming in there, as well as margins have seen an improvement as well. Other than that, in terms of overall, when you look at the fashion business, seems like that growth has picked up as well, and there's an improvement in margins over there. But a slight bit of misses overall coming in on the EBITDA front, but all in all, an inline set of numbers that has come in from the company. BPC gross merchandise values that has grown by 23%, and NSV growth is also 19% in the BPC segment. Fashion segment also has now stands at 130 crores, which is a growth of 28%, and overall the strong growth is seen in NSV over here as well. Now what the management is highlighting is that they expect Q3 to see better growth coming in. Q2 obviously had that festive season delay, so yes, we're seeing that Q3 is expected to see a better growth coming in due to the shift in the festive season. Management is aiming to maintain the current top line growth momentum in the fashion business and expect the margins to improve there sequentially from the current levels as well. And overall, they believe the peak of the fashion losses is now over. Management also is highlighting in terms of that they remain committed to continuously improving the unit economics of the fashion business as well. So keeping an eye out on that, as well as they believe that will overall improving overhead costs will be driving some of the margins of the company going forward as well. Normally the second half of the year is much better than the first half of the year for Nika as well. So let's keep an eye out on Nika.
Well, absolutely. Thank you so much, Winnie. Looks like Nika has a festive boost for the beauty segment. But switching gears to brokerages now, and they have gone ahead and downgraded select stocks. So you've got the likes of Divi's Laboratories and Bank of Baroda. They will remain in focus. And Mamakshi, tell us what the rationale is behind these downgrades.
Well, yes, let me first start off with Divi's Laboratories. We have a note coming in from Jefferies, and they have highlighted that the company posted a weaker than expected set of numbers in the second quarter. Now, they also believe that pricing pressures as well as higher operating expenses are actually leading to a margin contraction, and the key growth triggers that the company has highlighted are expected to hit the company's financials and improve them only post say the second half of FY25. So on the back of that, Jefferies has gone ahead and cut its EPS estimates for FY24 to 26 by almost 15 to 18%, and they've gone ahead and downgraded their rating on Divi's Labs from buy to hold and cut their target price significantly from 4,300 to 3,510 rupees per share. Also keep an eye out on Bank of Baroda. After the company's numbers, Nomura has come out with a report, and they believe that the company's margins have actually moderated. Higher fee income, however, has aided the company's profitability. The company did report a healthy set of loan growth, and in fact the elevated slippages were mainly on account of two large accounts. The return on asset, they also expect some return on asset moderation to come in as far as Bank of Baroda is concerned, and that is the reason why they've gone ahead and downgraded the stock from buy to neutral, and also cut the target price from 220 rupees per share to 215 rupees per share. And lastly, let's also focus in on Bharat Forge. We have a note coming in from CLSA wherein they've highlighted that they did witness some strong growth in domestic non-auto revenues, which in fact supported the revenues in the second quarter. Turnaround in subsidies are also expected, which in turn could drive the improvement in consolidated margins. They believe that new verticals are expected to be new growth drivers ahead. But given all of these factors, CLSA has actually downgraded their rating on Bharat Forge from underperform to sell, and also maintained their target price at 987 rupees per share, and that is because they believe that the share price action has all of these positives factored in, and that is the reason why the downgrade is coming in on Bharat Forge.
Bharat Forge, Divi's Labs as well as Bank of Baroda. So thanks Vamakshi for taking us through that. We'll see the impact of the downgrade on these stocks. But let's move on and look at some management commentary coming in for a whole host of companies that have declared their quarter two numbers. And let's start by looking at Bharat Forge. Now the management is saying that the outlook for commercial vehicles is positive for India. On the other hand, it is rather flattish coming in from the US. They aim for 25% margin in Indian subsidiaries by FY25, and they also aim to take the aluminium business EBITDA M to mid-teens by FY25. So that's the word coming in from the management at Bharat Forge. Moving on then, let's talk about the word coming in from Varun Beverages. The management aims to expand India capacity by 45% by calendar year 24. They aim to maintain current margin over next few quarters as well. Gatorade, they say, is growing at 17 to 18%, and Sting, which is their drink, is growing at a very healthy pace as well. So that's the word coming in from Varun Beverages. Positive commentary coming over there. Shifting focus to Emami, the management is expecting high single-digit sales growth in FY24. EBITDA margin will expand by 200 bips in FY24 is what they have to say. Also, let's look at what the management of Data Patterns has to say. They're guiding for slightly better margins in FY24 versus the previous year, which is FY23. They're saying good order traction from the European Union, UK as well as South Korea, and they see opportunity in government's defense acquisitions of 7,800 crores. So that's the word coming there. Shifting focus, Poly Medicure management commentary. They have revised FY24 revenue growth guidance upwards to 22 to 24%. They're guiding for US revenue to be somewhere between that $15 to $20 million mark over the next 3 to 4 years as well. So that's the word coming in from Poly Medicure. And shifting focus to Gland Pharma, then let's see what the management has to say. They're saying that margin at 34%, and they're guiding for margin to reach those 30 to 32% levels, and they say that this level should be sustainable going ahead. Operating efficiency of the Cenexi business will be released in the next 12 to 18 months. So that's the word coming in from Gland Pharma as well. All of these stocks today will be in focus on the back of their management commentary.
Well, absolutely, Snehi. So these stocks will remain in focus, but switching gears to US markets now, Christopher Wood, who's the global head of equity strategy at Jefferies, is surprised with the resilience of the US markets. Does he see a recession there anytime soon? Listen in to find out.
The resilience of the US stock market is surprising, but it's also worth noting that the S&P is a bit misleading. If I showed you a chart of the Russell 2000, in fact I showed this chart in my latest screen of here, the Russell Small Cap Index, or I showed you a chart of the US Bank Stock Index, actually these charts look much more like they're worrying about a US recession. Whereas the S&P 500 is really dominated by what has become what people are now calling the Magnificent Seven. And these are these big giant tech stocks. And there's three key things to understand about these big tech stocks. First of all, they're not US economy plays, they're global plays. So more than 50% of the revenues of these big seven companies are derived from outside the US. Second point, they are free cash flow positive, and they have big cash balances, which they're earning 5% on. And third point, since Microsoft's acquisition of GB Chat at the end of January this year, they're now viewed as potential AI plays.
So do you think the surge in US financial markets will not sustain, and the impact of high interest rates and monetary tightening will be felt with a lag effect?
Well, I think on the US economy, yes. So, but I think we already see the impact of monetary tightening in some of the other areas of the US stock market, because the market's actually much less buoyant if you take out those seven stocks. But obviously, the headline perception is driven by the S&P. But yes, on the US economy, my own personal view is we have not seen the full impact of monetary tightening. And in my view, the base case is that impact of monetary tightening will become more evident in coming quarters. And because the thing is, we had a huge explosion in M2 growth in 2020 in response to the pandemic. That's what caused the surge in inflation. As a result of Fed tightening, we are now seeing an unprecedented collapse in M2 growth, which has negative implications for the economy and asset prices in the US. But there's a huge base effect from the previous explosion. So actually, in terms of what I've been tracking, the M2 to nominal GDP ratio, we're only just back at the pre-COVID trend. We haven't yet gone below trend. So it's a bit like a rope around someone's neck. It's just gradually, the pressure is just going to start being applied more. So I would expect more, in the world where the Fed doesn't start easing, I would expect more of an impact in coming quarters. If there's no recession this time next year, then I will admit the US has achieved a soft landing. But basically, I think it's premature to draw such a conclusion.
So you are of the view that there could be a recession in US economy in the next 12 months?
Yeah, the surprise will be if there isn't one, because all the classic macro indicators are flashing warning signals. We've had an inverted yield curve. Bank loan growth is now turned down. So commercial industrial loan growth this time last year was 15% year on year in America. Right now it's 0. So, but there's one area where the credit's still flowing in America, which is not captured by the banking statistics. This is in private credit. So that area is still extending credit and keeping the cycle going.
If US slips into a recession, and since that's the world's largest economy, it will have far-reaching impacts, and especially far-reaching impacts on financial markets, and risk in the world could be redefined. So are we in for repricing of risk? Are we in for repricing of financial equity markets in general? Because if world contracts, equity, which is a growth denominated asset, will contract the fastest.
That's true, but there's one silver lining of any recognition that US could be entering recession, and that will be a very sudden U-turn by the Fed.
And you see that happening? How soon do you think Fed will cut rates?
Well, no, the question is, does the data weaken? So long as the labor market's holding up, the Fed will keep policy on hold. My guess for the last few months is we've seen our last rate hike. But the issue is what happens if we suddenly get more weakening in the US labor market. In my view, in a world where the Fed is put in a position where it has to prioritize the employment mandate, its employment mandate, or its inflation mandate, my guess is they prioritize the employment mandate, even if inflation is not yet at 2%. And in that world, that will send a signal that the Fed's not going to fully enforce its 2% inflation target. And that will send a signal that will be negative for the dollar, which will be good for emerging markets, but it will be negative for the US government bond market.
Well, that's the word coming in from Chris Ford on where he sees the US economy headed. But I'm afraid with that, we're completely out of time on this edition of Market Cafe. But while we bid you goodbye, you stay tuned to the channel because the market will take all the action ahead.